The United States economy is growing at a faster rate than many economists predicted. The nation's GDP grew at an annual rate of 2.4% from April to June this year. A number of economists predicted that number would be 2%. To discuss this, I am joined by Lori Bettinger. She is the president of Bancalliance and former director of the Troubled Asset Relief Program. Lori's fourth straight quarter that the GDP has grown. So what does that say to you about the country's economy?
I think, as you mentioned previously, I mean, this is a positive sign. This is a sign that our economy remains strong. We've seen growth across a number of different industries, right? We're still seeing consumer growth, which we often describe as the backbone of our economy. That's remained strong. If you look in that, you see a lot of spending on services, which is very consistent with what we've been talking about in the job market. That, even though, it feels like we're fairly far from the shutdowns, we still see people spending on things like concert tours and vacations and experiences. We see businesses investing. So businesses are confident, they're growing. And we saw increased spending from local and state government. So really across different parts, we saw, a lot of growth in the economy in these figures that were released today.
Federal Reserve Chair Jerome Powell said Wednesday that the central bank is no longer expecting a recession. Does that seem right to you?
It does seem right, I think, based on the data we have. I think you always have to be cautious, as he was. I think he said he wasn't willing to start necessarily using the terms optimism yet. There's still some headwinds in the economy. And as we heard yesterday, the effects of these increases in interest rates, they haven't affected all parts of the economy yet. They take a while to work through. For example, if you haven't had to buy a new car, you haven't had to buy a new house, you probably aren't as directly affected yet. And, but perhaps you're going to have to buy a car in a couple of months. Well, when you go to get a loan, you're going to see it's, much higher than it could have been 2 or 3 years ago. So I think we're still going to have to wait and see how that comes out. We have, the student loans starting to require repayment in a couple of months. So there are some things coming up that could, slow down the economy. But it really feels like we're, at least going to, for now, avoid this recession that everyone kept talking about, even if the data wasn't quite there to suggest we were in a recession.
Yes, there was a time where if certain people said out loud that America was not in a recession, they would be shouted down. But that recession never came. What do you make of that? I mean, were we really off? Is there a different story we should have been telling ourselves? What do you make of that?
I think a lot of it was concern because, we have made it through these past few years where every time we thought we'd turned the corner, something new came up, whether it was supply chain or inflation or global instability. And so I think, especially given how inflation really seemed to come up and take so many people, so many policymakers by storm, there was this belief that what you would need to do to counter the inflation, in particular, increasing interest rates by really unprecedented amounts, that it was going to be almost impossible to avoid a recession. We heard this talk of this soft landing, which would mean that, the economy would slow enough to not tip into recession. And everyone thought that was really difficult. But I think what we found is, in a way, maybe we underestimated the underlying strength of the economy and really consumer confidence. And people had a lot of savings they wanted to spend on these experiences. And I think that's really powered through the economy through a slowdown. I think there are signs of a slowdown, but things haven't fallen off the cliff like I think so many people feared. And you're absolutely right. If you said that a few months ago, everyone would sort of accuse you of being a Pollyanna or being overly optimistic. But now I think we see that path.
And just before I let you go, Lori, I want to try one idea out on you. You mentioned there is still these high interest rates in the economy that are going to take a while. Right. Chair Powell said that to get to the soft landing, that might require more action, which might mean more raises. And also the Dow, which had a 14-day positive streak, which is the best since 1987, had a bad day today. I wonder if you connect that with people seeing these strong growth numbers and thinking, well, the Fed's going to look at those strong growth numbers and say, we still got to keep tapping the brakes.
I think that's certainly a possibility. And, I think we heard Chairman Powell say yesterday, when we get to the next meeting in September, we'll have sort of 2 more months of data. And there's a chance we could raise rates. And there's a chance that we could keep rates where they are. And to your point, when you see, a really strong report like today, you have to think that market participants think to themselves, if we continue to see this growth in the economy, if we continue to see, a strong job market, lots of job growth, which, I think it's slowed down somewhat. then maybe we are looking at more increases either in September or future months. So, maybe there's a little of that, but still, I think you have to look at the report today and, sort of the recent data and say that this is a sign of a good, healthy economy. And, it's easy to look for, look for this lining there. But I think, these have been good reports and I'm optimistic about where the economy's headed.
Lori Bettinger, president of Bancalliance, thanks so much for being with us.
Thank you.